Okay, today we want to talk about the mortgage market, low interest rates, and the benefit that this is having for both buyers and sellers. Obviously for buyers, it gives us low payments and frees us up, right? Or it gives us a little more cash to buy existing inventory. And for sellers, that's a good thing because you get the price that you want and you get to move on. So I wanted to share this article from this past week, actually December the 12th. Fed signals longer pause on rates. Chairman Powell cites, and it goes on. After lowering rates at their 3 previous meetings to guard the U.S. economy from the effects of trade tensions and a global slowdown, Fed officials on Wednesday indicated comfort with leaving monetary policy on hold through next year. And then it goes on to say, too, that by a vote of 10-0, the Fed agreed to keep the central bank benchmark rate between 1.5 to 1.75. Bottom line, all this stuff adds up to lower interest rates on mortgages, and this is good for the consumer. So as we have had some price appreciation, home buyers, though, can benefit from the lower rate. They can actually afford more home with the low rate. And again, sellers benefit by getting their price. A couple other things, though, that I want to touch on here. One is the fact that when we lock in a 30-year payment, it's a lot better than if somebody is renting a home, where even in California recently, we passed a law that said that rent control, or that rents will be held to no more than 5% appreciation, well, 5% increase plus whatever the consumer price index is in that area. And for the Central Valley market, that's about 3%, which means when a lease is up, that you could be looking at an increase as much as 8%. And they say that that is control. So you'll want to lock in payments with low interest rates. A couple of words on the economy, though. Currently, we are at 3.5% unemployment. Now, what the government considers full employment is under 5%. So right now, nationally, we've been at 3.5%, extremely low. Locally, our Central Valley, we're at 5%, just below that, unheard of in our Central Valley market. So unemployment is good. The economy is moving. We've been maintaining about a 1.8% inflation. All these things are driving, right, again, a healthy mortgage market for our borrowers and sellers. But here's more good news. In addition to this, what we're going to have come January 1, I want to grab this here, is our conventional loan amount for both single family homes, duplexes, triplexes, all the way up to fourplexes, is increasing. On a single family home after January 1, conforming loan limit is $510,400. And then it goes up for duplexes over $653,000, et cetera, et cetera. So big news. What this allows is our borrowers in the Central Valley market to maintain a conventional loan amount instead of having to bump up into a jumbo loan, which are higher rates. So great news on loan limits increasing. And other programs out there, so that's why you want to talk with a trusted advisor, talk with your realtor, and they'll get you in to talk with their loan officer. There are programs out there that can really help bridge a borrower's ability to buy as well. Let's say that a buyer has a home to sell, may not want to sell it, but be able to make a real strong offer on a seller's existing home. You don't want to make it contingent on selling your home. So there's some programs out there, we call them a combo or kind of a 90-10, where you might get a loan on the new residence, have a small second, and then as soon as you sell your home, you pay off that second, and you're good to go. But talk to your trusted advisor on that. Again, great things happening in the mortgage market. Interest rates are low, benefits both buyers and sellers. Good luck.